Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, I have to say we've called it wrong on the S&P 500, which in the last couple of days has had a real gung-ho rally.
Yeah, it has. I mean, I've been quite cautious on this market as it's been bumping up at that resistance area around 28.15. And it has stalled there a little bit. It's been a bit noisy around that resistance area. But the fact that it didn't come back down significantly late last week started to give me the feeling that it probably was going to go higher. It's often one of those cases where if it's not going down, then it's probably going up. And that's exactly what seems to have happened. And you can see it looks as if it's broken out through the top of a little bull flag pattern over there last week. And it's on its way higher now. So the next question is whether it moves up to this prior high, which was set in September last year, which was at 29.40. And it's actually not that far away now. It's only about 2.5% away for the S&P 500 to go and challenge that prior high. So, you know, this has been a monster rally. And
yeah, I mean, that's a proper V-shaped recovery.
It has been. It's exceptionally unusual to see such an aggressive V-shaped recovery like that. Usually when you get a bounce off those lows after a very aggressive sell-off, you get some sort of a double bottom or another retest of the lows, and then it starts to move higher. And in this case, I think a lot of us were expecting that, and it just didn't happen. And this market has continued to move higher and higher. And I think part of that has come about due to the fact that the interest rate outlook in the US has actually changed so much. And we've got the US 10-year Treasury that's dropped from 3.4% all the way down to 2.4% currently. That changes the discount rate in your sort of present value of stocks significantly. And I guess that's got a lot to do in terms of explaining this rally on the S&P 500.
And we're having a little fillip of our own on the JSE.
We are. It's also been moving higher. I know last week I said that we were at the bottom of that channel structure that we've been talking about. That channel's been in place since December of last year. And you can see how the market tested that channel last week at the bottom. And at that stage, I know I said maybe we would start to see a bit of a bounce and perhaps the formation of a right shoulder of a head and shoulders. That hasn't been the case at all. It's actually just continued higher. And we're now trading at new highs for the year. So the first quarter of this year was very strong, and this market it still looks as if it's going higher. In terms of that channel structure that we look at there, the top of the channel now comes in at about 52,000. So it's not impossible that it maybe goes up there, and then we see some consolidation from then.
Yeah, which is nice, and it's been one of the strongest quarters in many a year.
I think since 2009, if I'm not wrong,
Okay.
which is when we were bouncing very hard off the lows of the financial crisis. So yeah, it's been a phenomenal quarter, particularly on the US market, but also for our market, it's been very strong as well.
Yeah. Okay, let's get into some of the recent trades, and there's also two trades to talk about this week. Last week we were crowing about how well Sibanye had done, and you'd actually taken a bit of profit from the trade, and then you decided to run it further. And I think when we were talking last week, it was north of 17 Rand, as I recall.
Yeah.
And then it just collapsed in a heap. So
yes. What I did here, and you can see what got us into the trade was the fact that the stock broke to the upside through the upper boundary of that flag pattern, which is identified there on the chart. We went long at 15 Rand 20, and my target all along was 16 Rand 50, but that was the initial target with the expectation that it could probably go on and rally to new highs. And it did that, but I decided to bank half the profit at 16.50, which was our initial target level. So we did that. We sold 1,600 of those CFDs at 16 Rand 50. And then I said I was going to run the remaining part of the trade and look for a close below the prior day's lowest price in order to run a trailing stop loss on the remaining half of the position that we hadn't closed out. And the thinking was that allows you to effectively ratchet up a trailing stop loss as the price moves higher, protecting your profit, but also giving you the ability to participate in any further upside. Nice in theory, and if the stock had continued to trend higher like I sort of thought it might, it would have worked well. Unfortunately, you can see that what happened on Thursday last week is the share price came under almighty pressure. And that came after the palladium price actually shot lower, quite aggressively lower.
Yeah.
And obviously Sibanye Stillwater is involved in part of their business is platinum and palladium mining. And you saw the price of Sibanye down 10% on the day. So it kind of meant that by the end of that day, it almost gone all the way back to our entry point, in fact. I did manage to exit at 16 Rand and 7 cents, the remaining half of that trade. So we still get out with a decent profit. We made 3,172 Rand there. So It's a good profit, but when we were sitting here last week, we were around about 5,000 Rand to the good on this overall trade. So it meant that we actually did give back quite a lot of that profit, unfortunately, on that huge move to the downside last Thursday. And
But knowing when to sell, this is what you have always said on the show is the most difficult part of trading for you.
It is. For me, knowing when to sell is the hardest part. Getting a good entry, we can do that, and I think we've shown that we can do it fairly well. Executing a stop loss, I can do that with my eyes closed. But knowing the right time to sell is extremely difficult because you either overstay your welcome, which was the case here, or alternatively you sell too early and then you see the price continue to move further in your favor afterwards. So it's extremely difficult to know exactly the right time to sell. And this is just another lesson of exactly that.
Yeah, although I have to say, knowing when to sell also implies a degree of prescience that I don't think any of us have. So
yeah, exactly.
So don't beat yourself up too much, Garth.
No, of course not. It's always easy in hindsight. That's what we always say.
Yeah. Okay, so let's move on. We have banked some profits on that trade, and there are two trades that you're actually entering into this week. Well, one you've entered into and closed out already, but before we get to that one, the first is KAP Industrial.
Yeah.
Interesting stock because not necessarily a sort of a go-go punters kind of share, but there's some dynamics affecting this stock.
Yes, there are. Look, it's quite a liquid stock, so from that point of view, it fits the bill as a nice trading stock. It does move around fairly, quite a bit, and there's quite a fair amount of liquidity, quite a lot of volume that trades through the stock. What actually got us into this trade last week was when an accelerated book build was announced, whereby Steinhoff, which was a 26% shareholder in KAP Industrial, Steinhoff has gradually been reducing their stake in this company as Steinhoff unwinds its mess and starts to sell down assets to try and stabilize its balance sheet. So last week there was an announcement that came out after market one evening whereby Steinhoff said they were going to be selling their entire 26% stake in KAP Industrial, and the book build placement was done at a price of R6.85. We figured around about R7 is probably where the price would go to. It might not go much lower than that. And we would look to buy. And the fact that Steinhoff overhang is now out of the way actually bodes quite well because that has always been in the back of everybody's mind that at some stage Steinhoff might come to the market and sell their remaining stake. Now that's happened. They're out. They're no longer a shareholder in this company. So what you should see, and what usually happens with these accelerated book build type of situations, is you get that big gap to the downside, which is exactly what we got last week when the book build was announced. And then you invariably get some sort of a recovery because effectively nothing's changed at the company itself. All that's happened is you have a short-term overhang of stock and oversupply, which depresses the price. And once that's out of the way, then generally your price should return more or less to where it was prior to this transfer of shares. So what we did is we went along and we bought at R7.02 with a stop loss at R6.85, and I'm looking for a target here basically to go and try and fill that gap that was created, which is at R7.40, R7.50, that sort of area. So if we go through the mechanics of this trade, like I said, we long from R7.02 with a stop loss at R6.85.
Okay, so where the shares were priced, yeah?
Exactly. I don't want to see it going below R6.85 because invariably with these book builds, what you'll find is that if it starts to go below R6.85, then that means all the people who took up the stock in the book build are now underwater.
Dumping it.
And they start to dump.
Yeah.
So if it goes there, then something's not right, in which case I'll exit. So far, it seems to be holding well above that R7 level, so that's encouraging. Our risk per share, therefore, is 17 cents. I'm risking 1.5% of our capital here, so that's 2,250 Rand. And if we take that 2,250 Rand, we divide it by our risk per share, which is 17 cents, it means we can buy 13,235 CFDs. So that's what I've done for the portfolio. The target, like I said, is R7.40, and that means that our risk to reward ratio here is 1 to 2.2, which is decent enough in my books.
Yeah, decent, and I suppose hopefully fairly easily achievable.
Yeah, I think it should be. Barring any other unforeseen catastrophe, I'm fairly confident that we will see this price moving higher in the weeks ahead, ultimately go and reach that target.
Yeah, okay, so that's the open trade. And now this is a trade that you entered into and closed out with great aplomb, I have to say. So talk us through Coronation.
Yeah, we've had a few trades this year where it's been the other way, where we've gone into the trade and the trade has been stopped out before we even went to air. In this case, it's one of those trades where I went into the trade and we've actually managed to bank the profit before the show even goes to air. It was a trade in Coronation, and what you can see there is that the share price has been climbing over the last 2 months or so. It's been quite constructive. There's been a pattern of higher lows and higher highs evident. Throughout the latter half of March, you can see how the price has been consolidating. And effectively, the 46 Rand level has been overhead resistance, but there's been clear evidence of buying at the lower levels. And I looked at this yesterday and figured this thing looks as if it is likely to push out through that 46 Rand level, especially given the bullishness that we had seen on the US markets on Friday evening.
Which continued into our own yesterday.
Correct. We knew we were going to open strong on Monday, and ultimately that was likely to be the catalyst that would push Coronation out through that resistance level. I did flag this for the subscribers on traderscorner.co.za, so they got their heads up nice and early. And ultimately what it meant is we went long of the stock at 46 Rand 20, stop loss below 45 Rand, and I was looking for a move up to the 200-day moving average at about 49 Rand. Now, I didn't think it would happen so quickly that we would get there. I figured this was a trade that was going to be on for a week or two, and ultimately it would grind its way up there. But as it turned out, Coronation was up 7% on the day yesterday, and it went straight from our open all the way to our target price during the same day. So, you know, I look at this and I think this is the perfect trade. If we could have, if all our trades were as simple to execute as this one, we would be really sitting in the pound seats.
Yeah, you wouldn't need to do the show, Garth.
We
so
wouldn't.
Very quickly, you should take us through that.
All right, so we long from 46 Rand 20, stop loss 45 Rand. It means our risk per share is 1 Rand 20. Risking again 1.5% of our capital, which is 2,250 Rand. I get a number of 1,875 CFDs that we were able to buy with this. Target is 49 Rand, as I mentioned, and the risk to reward ratio here is 2.23 to 1. And then, of course, here you can see that the stock got to that target level, and we banked the profit yesterday. Like I always say, the best trades generally work straight off the bat, and you actually get your profit quite quickly.
Yeah.
And that's what the case was here. We made 5,050 Rand after all costs are taken into consideration on one day.
Not bad for a day's work. And
Not
it's
bad.
the kind of trade that suckers in people into day trading, isn't it?
This is like, you know, when you're playing golf the way I play it, not very well, but you hit that ball straight down the middle of the fairway and it comes out the middle of the club and it just feels fantastic.
Yeah.
And that's the shot that brings you back to the golf course next time. This is the trade that brings you back to the trading screens again next time.
So very quickly then, just to wrap up, it's been a great couple of weeks for the portfolio.
Well, a great week. We're up now
5.5%
5.5% up on our South African portfolio. Those are the three trades that we've discussed there. So you can see KAP Industrial still open, Coronation with a profit, and Sibanye with a profit. So three good trades over there. And then lastly, our offshore portfolio still languishing. I really do need to actually get on and do something here, but we've been a bit constrained by time. But still down 1.3% here, and I need to get my act together and just do a couple of trades on this offshore portfolio to get it ticking over.
Yeah, okay. We have to leave it there, Garth, but congrats on a good week that was. Garth McKenzie is, of course, founder and editor of Traders Corner.